With me now is Capital Network's Ed Stacey. Ed, good afternoon.
Good afternoon.
We're taking a look at Corero Network Security. Just a reminder for those watching, to see Ed's full report, click on the eye in the top right-hand corner of your screen. So Ed, Corero Network Security, we spoke recently when they released their H1 results. Strong commercial progress, but shares continuing to trade lower. Ed, is this something that we need to be taking a closer look at?
No, I don't think there's really any sort of a hidden detail. In the first half results, they reported very positive progress for SmartWall, which is the DDoS protection system, that's the whole kind of focus of Corero. Also a big new contract win announced the same day. But as you say, the shares did trade lower. We can only surmise what the reasons might be, but I think it might be a reaction to the degree of H2 weighting that's baked into the full year revenue expectation. If that is what the market's worried about, it's not a share that a concern that we share. And I think it really misses a bigger point about the big positive in terms of the strength of recurring revenues that they announced in the first half.
Tell me a bit more about this H1-H2 split, Ed, this H2 weighting.
Yes, so the company stated it's on track for the full year market expectations. We're forecasting $11.8 million of revenue. You can see that in our report, all the details. We maintained that exactly, no change. It implies a revenue split for H1, H2 of about 40-60. So it's an H2 bias, but we'd argue that no, that's not really a big ask, because if you look at the growth rate sequentially for SmartWall, so what happened from H2 last year into H1 this year, if you take that sequential growth rate and extrapolate on into H2 of this year, it takes you to the full year number. Reasons to suppose that that's on track? Well, they've announced some big contracts, so that helps. Secondly, when the company's given this guidance, they already know the July, August, and basically the September numbers. So, they're not shooting in the dark to arrive at these numbers. And then finally, there's this issue about recurring revenue. So, for example, anything they signed in May or June, they'd only have booked a month or 2 months in the first half, but they know they've got 6 months of it in the second half. So that recurring revenue is going to help.
Let's talk a little bit more about the recurring revenue element here, Ed. Continuing to grow strongly, of course, clearly significant.
Yeah, I think it's one of the big highlights for us in the first half was the recurring revenues up 177% year on year. Now, for those who understand the software space already, I don't want to teach grandma to suck eggs here, but I think it's just worth covering. You can buy SmartWall as a perpetual contract, so that's a one-off upfront payment and then you own the product, or you can do it under a licensing type deal, so recurring revenue for Corero, where you pay a regular fee. Now, if Corero signs 10 customers this year and 10 customers next year, if those are all perpetual style, then you would have flat revenue. If they're recurring, then your revenue will be doubling because the first 10 are still paying in the second year. So all the revenue is incremental. So we should be very, very happy when we see more of the revenue as recurring revenue. And that's exactly what Corero delivered in the first half. It's thanks to selling SmartWall under the protection as a service business model, which is a new thing that's been very successful. So that gives us additional confidence about the growth going into 2018. And then if you look at just how the shares are valued on those 2018 revenues, I think the shares just look very cheap here. So we're surprised at the reaction that the shares really have not responded as positively as they should have done.
Thanks very much, Ed. Good to get your analysis. Ed Stacey there from Capital Network. And of course, for Ed's full report, click on the eye in the top right-hand corner of your screen.